When most people think about making money from stocks, they picture the New York Stock Exchange, traders yelling across the floor, making split-second decisions, and walking away with fat paychecks. Here's the problem. That image is completely misleading about how real wealth gets built. Most of those floor traders, they're working for investment firms, not getting rich themselves. And the ones trying to get rich from home? Statistics show that 80 to 90% of day traders lose money over time. But here's what nobody tells you. There's a massive difference between trading and investing. And understanding this difference will determine whether you build wealth or burn through your savings. This isn't about being anti-trading or pro-investing. This is about understanding the game you're playing and choosing the strategy that actually works for regular people like us. So, what is trading actually? Trading is trying to make money from short-term price movements. Traders don't care what a company does. They just want the stock price to move up or down so they can profit. Day traders buy and sell stocks within the same day. Swing traders hold positions for a few weeks or months. Some traders make decisions in seconds using computer algorithms. The core idea, buy low, sell high, repeat, all as fast as possible. I tried this when I first started, spent hours staring at charts, tracking price patterns, convinced I could outsmart the market, made a few quick wins early on and thought I was a genius. Then reality hit. For every winner, there were 3 losers. The stress was insane, the time commitment was massive, and my overall returns, terrible. What about investing? Investing is buying pieces of businesses and holding them while the companies grow over time. Investors care about what the company does, how profitable it is, and whether it'll be worth more in 10 years. When you invest, you're betting that businesses will grow, create more value, and become more profitable over time. You're not trying to predict what the stock price will do tomorrow. You're banking on long-term business growth. The core idea, own great businesses and let time do the heavy lifting. Warren Buffett built his fortune this way. Jeff Bezos got rich by holding Amazon stock for decades, not by trading it. Most millionaires you've never heard of got wealthy by consistently investing in index funds. So what separates smart money from dumb money? Smart investors care about what a company is actually worth. Traders only care about price movements. When you buy a stock, there's the price you pay and the actual value of the business. Smart investors try to buy companies for less than they're worth. Traders, they couldn't care less if they're buying shares of Apple or a company that sells pet rocks. They just want the price to move. This creates 2 completely different approaches. Investors do research. They read company reports, understand the business model, and calculate whether a stock is cheap or expensive based on the company's fundamentals. Traders study charts. They look at price patterns, volume indicators, and technical signals to predict short-term price movements. Neither approach is inherently stupid, but one has much better odds of success for regular people. But why is trading stacked against you? Trading isn't impossible. Some people do make money. But here's why the odds are brutally stacked against amateur traders. You're competing against professionals. Investment firms employ teams of PhD mathematicians, have access to cutting-edge research, and use algorithms that can execute trades in microseconds. You're bringing a knife to a gunfight. Every trade has costs. Commissions, spreads, and taxes eat into your profits. When you're making multiple trades per day, these costs add up fast. You need to be right significantly more than 50% of the time just to break even. Emotions destroy you. When you're making rapid-fire decisions with real money, fear and greed take over. You'll sell winners too early and hold losers too long. The stress alone will make you make terrible decisions. Information moves faster than you. By the time news reaches you, professional traders have already acted on it. You're always playing catch-up with information that's already priced into the stock. I'm not saying this to discourage you. I'm saying it because these are the realities nobody talks about in those "I made $50,000 day trading from my bedroom" YouTube ads. So why does investing actually build wealth? Investing works because you're betting on something that historically goes up, the overall growth of businesses and the economy. Over any 20-year period in modern history, the stock market has delivered positive returns. Companies grow, profits increase, and stock prices follow over time. You're not trying to beat the market, you're betting on the market. Time is your biggest advantage. While traders fight against the clock, investors use time as a weapon. Compound interest means your money makes money, which makes more money. A $10,000 investment growing at 8% annually becomes $46,000 in 20 years without you doing anything. Less stress, more life. You're not glued to screens all day watching price movements. You invest regularly, check in occasionally, and let your money grow while you focus on your career, family, and actual life. Lower costs, higher returns. Buy a low-cost index fund, hold it for decades, and you'll likely beat most professional traders and fund managers. The math is simple. Less trading means lower costs and higher net returns. What do the real numbers show? Here's what the data shows about trading versus investing. Trading results. Studies consistently show that 80 to 90% of day traders lose money over time. The average day trader underperforms the market by significant margins after accounting for costs and taxes. Investing results. The S&P 500 has returned about 10% annually over the long term. A simple buy and hold strategy in index funds has beaten most professional money managers over 10-plus year periods. Time investment. Successful trading requires 6 to 8 hours daily of research and active monitoring. Investing requires maybe 1 to 2 hours monthly to review and rebalance. So, can you make money by trading? Yes. Will you? Probably not, and definitely not consistently. So what does this actually mean for you? If you're determined to try trading, treat it like gambling. Only use money you can afford to lose completely. Start small, understand you're probably going to lose money, and consider it education rather than wealth building. For building actual wealth, investing wins every time. Set up automatic investments into low-cost index funds. Invest consistently regardless of market conditions. Focus on your income and career growth rather than trying to time the market. We can look at plenty of examples of how people have gotten rich. They built wealth by owning businesses and assets for decades, not by making clever trades. So here's what actually works. Trading feels exciting because it promises quick wins and constant action. Investing feels boring because it actually works. You can spend your time trying to outsmart professional traders with billion-dollar algorithms, or you can do what every wealthy person does. Buy parts of great businesses and hold them while they grow. The choice seems obvious when you put it that way. The stock market isn't a casino unless you treat it like one. Treat it like what it actually is, a way to own pieces of growing businesses, and it becomes a wealth-building machine. Your future self will thank you for choosing the boring option that actually makes you money.